Hello traders, welcome back to the channel. This is January with Trading the Charts Pro, and this is one more of our weekly session where we break down the overall market to come up with a solid game plan for the upcoming week. We're going to break down all the indices and see where is the market projected to move so we can know how to day trade or how to possibly set up our swing trades for this upcoming week. All right, so let's dive deep and let's break it all down right here. Okay guys, we're starting off right here with the NQ because guys, tech is not dead. A lot of people feel like, yo, tech is dead, growth stocks are dead, but at some point the rotation will come, and you, my friend, as well as myself here, want to be ready when this rocket ship blasts off again. All right, so let's talk about it. Guys, we know tech was, beasting for, a pretty good period of time. And then from there, we started to get situation where interest rate, or the fear of interest rate actually increasing, started to dampen, the tech trades. All right. We came down, boom, hit support. Then we bounced. We came back above the 50 EMA. And then right around this area, we started to look at a potential inverse head and shoulders pattern. All right, now to be 100% honest guys, do I still believe that the inverse head and shoulders pattern is still alive? Typically, you get one shoulder here while you're going down, and then when you're going back to the upside, you get one more shoulder that eventually break out and move to the upside. All right, so when we look at this chart from a technical perspective, do I feel like the inverse head and shoulders pattern in the Nasdaq futures is 100% still intact? And yes, my friend, I am excited. I believe the tech trade is still alive. We just need to break out of the short-term downtrending resistance, which basically on this day I'm like, oh my God, it's over for tech. Tech is really going to come back down into the 12,000 at 265 level. But then, we get a very nice, buy-in came in and bought it up back. And then I'm like, let's see what happens tomorrow. And on Friday, guys, the market opened and it started to sell off. And I'm like, at this point, my hope is, almost dead, even though I was still building positions in a lot of very good tech stocks that I like. And in my next video coming out after this, I'll break that down a little bit more in terms of the trades that I'm in. But right here, guys, what we need to see is we just really need to see tech break out technically above 12,000, 13,250. So if we clear this level, or when we clear the 13,000, what's wrong with me, 250 level, which is right here, then at this point I am 100% confident that this is a breakout of the second shoulder of the inverse head and shoulders pattern. Right, shoulder 1 and shoulder 2. When we're coming down, typically shoulder 1 is a bear flag that eventually break down and comes down lower. That's all done. Price hit into the support, and now we're going back up. So we run up. We have to build what is also looks like, or what typically is another shoulder, but it has the concept of a bull flag. So what do we need to see for this to move higher? Well, we need to get a breakout of the bull flag concept or construct right here, and that will be completed when we pop out above 13,250. So I'm excited. Once we break this downtrending line also, then that's a clear sign for tech to embark on the journey back up to 13,867. All right, so as a trader, this is an opportunity for you to build out your position in the stocks or the tech sector. If you like to trade sectors, you can go QQQ and you can build out your position right here in tech, because I'm confident that we get a move higher. Okay, now if tech, break down below 12,000, technically 750, now I'm starting to become very, very concerned, especially after this move that we had here on Friday. I'm not looking to see, or I don't want to see any further move to the downside, because that would, just be a clear sign that tech cannot break out of this, and then this is or has become a failed inverse head and shoulders pattern, which would give us a move back to the downside. But even at this level, it's an opportunity to go long again in anticipation of a bigger move up. But right here, right now, this is what I'm seeing. We just need to clear out of this level, and the moment we get a break out of this level, tech blast off, and tech is going to move back to the upside. Don't get distracted by the dilly-dally moving around crazy stuff that's happening right here. Don't get distracted. Hold what you hold and know what you hold. When you know what you hold, it's easier to hold what you hold and be patient. All right, so that's how I'm actually looking at this stuff. So let's move on over to the ES, my friends, and see what we're telling guys. When I look at the ES, yes, the S&P 500 always moves higher, but when it comes to risk reward, when it comes to being a trader, when it comes to measuring probability and finding the low risk trade, again, in the 10 and the 20, I felt like, or right at the 50, this was the low risk trade, riding it up back up to the short-term resistance at the 3,969. All right, so this is where we're sitting at right now. What do we need to see to be more confident in tech, in S&P? Well, if we get a breakout above this level, then that opens the door for the S&P 500 to continue on its journey to 4,000, and eventually on its journey all the way up to 4,000 around 135. All right, so short term, we be cautious here because this can become a double top. But if on Sunday, when futures market open, we get a very nice breakout, the market continues higher, then we're still playing the futures to the upside, specifically ES to the upside. All right, so our next level is going to be the resistance, uptrending resistance line here. And when we got up there, then we start to become cautious, because we can see clearly what is the trend. The trend is pulling back into the 10 and the 20 or the 50, worst case scenario, EMA, and then from there we get a bounce and the market continues to move higher. How long can the market trend for? Well, guys, if we look at the history of the S&P 500, which I'm going to switch over here right now, if we look at the history of this thing, typically the S&P 500 will really trend for about 3 years. 3 years, all right? So 2016 all the way to around 2019, technically the market was still trending, all right? And if we go back a little bit further, we can see that typically the market trends for, from here 2012 to around 2015. That was a nice trend. So typically the market can continue trending for another 2 years, right? It doesn't mean that you're going to always be, long. Yes, you want to be long and take profit at the resistance levels and then look to buy back in. All right, I'm going to do another video also talking about long-term investing and why you should stay invested for the long term. All right, because you do not want to miss out on all of this long-term growth. And as a trader that is in and out, swing trading or whatever, you do not get to benefit from this parabolic or just long-term growth. All right, and if you're a sophisticated trader, you want to have multiple strategies that also capitalize on every aspect of the market, meaning you want to be competent in finding or taking some day trading opportunities. You want to be competent in taking very good solid swing trades, And then all of that should be building towards your long-term goal, which is to build a portfolio that can eventually retire you, because you cannot work as hard for your money as your money can work hard for you. Okay, all right guys, let's just switch back over and take a quick look at the YM futures and see, you know, what is the YM looking like. Guys, to be honest, I don't really want to be here right now. I know, yes, tech, you know, YM has this very nice run. We had a small pullback into the 20 EMA and now we bounce, but we are right back to the short-term resistance level. So what do we do here? Well, what we do here is we move on over to tech and find the low risk opportunity, because this is what traders do. Traders rotate out of places where the risk is high and find the places where the risk is low and the probability is high. The risk is low, the potential reward is high. That's what we do as a trader, and we will continue to do that. So come Sunday, futures market open, I'm looking to see this thing potentially break back out of this level. If it doesn't do it on Sunday, I'm going to be watching very closely on Monday, because guys, at some point tech is going to break out and it's going to continue embarking on its journey back to 13,600 or 13,867. All right, so guys, if you did like this, and oh, one more thing, guys, we have to pay attention to the VIX, because the VIX tell us typically when the market has run to a peak and we're looking to get a reversal to the downside. When we look at the VIX, guys, the VIX is continuously trying to put pressure on support. Whenever we see price action continuously put pressure on support, it means that support has the probability of breaking. When support breaks, price action is no longer supported by that specific level, hence the price will go lower. When we apply all of that to the VIX, guys, the VIX continuously be putting pressure on the $20 level. At some point, the VIX is gonna drop below $20 and it's gonna come back down into the $11 level. And when that happens, my friend, you want to be long tech because tech is going to rocket off and continue moving higher when the VIX comes back down to the levels it was before the market crashed in 2020. And with that, my friends, I'm gonna wrap this video up right here, and I look forward to seeing you in my next video. Thank you for watching. You know, throw those comments down below, subscribe to the channel, turn on your notification bell, and you, my friend, I will see you in my next video.